Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Monday, September 18th, 2023. Before I click through all the charts, I just want to encourage you to please click like, share, and subscribe, if you would, to the Wicked Stocks YouTube channel. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report, daily analysis, and the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 active ETFs, as well as weekly analysis on the S&P 500 index, the NASDAQ 100 index, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% more or more swings on those individual stock picks. Last week was Amazon and T-Mobile. Prior to that, I could go through a whole list. There's 8 in the last month. Many of them are still pertinent. You can check it all out at no cost to you whatsoever for 5 full days. Sign up for wickedstocks.com. You've got 5 days to cancel your subscription before your card is charged. And so, check it out. Anyway, let's jump into the charts here. Just to mention that in May, we settled above this significant long-term channel top that is now at 167.99 for the entire week, anticipating eventually the 227.19 rising channel top. I do see that this sell-off is nothing more than a downside correction and what should continue to be a longer-term upwave that commenced with the 167.99 settlement above, anticipating 227.19. I think the second quarter of next year, third quarter of next year is in reach, is likely. But we're not there right now. In fact, there is still the clear and distinct possibility that we will test 167.99 in the coming week, 2 or 3. And that remains true below this 180.34 horizontal structure. If we can close above 180.34 in the coming days, later this week, let's say, then we've got a good September low, and we should spend the following 2 to 3 weeks making our way back into the low 190s. Where we could top out for a weekly basis. I may bump this up to a 4-star resistance. I think it deserves that. It may well contain buying by that point in time into November. We could fall off again from here back into the mid 170s, let's say, the channel support, so forth and so on. It would be a settlement, just let you know right now, above 190.82. That would set off a longer term buy signal. By that I mean into November trade. The following month or two then likely to reach this 210.12 channel top, which would represent a new all-time high, so forth and so on. And by that point in time, I mean, it is possible that by the end of the year, we could reach 210.12. I don't think it's likely. I think what is likely is that over the coming, well, I don't want to say likely, but what is possible over the next week is that we settle above 180.34. That indicates a good September low, and the fact that I don't expect anytime soon to see that 167.99 channel top, and with that a 2 to 3 week rally to 190.82. 190.82 could be a trouble spot for more than a week. It could contain buying, through, as I say, into November and possibly into later year. We could get into a consolidated framework here for several months. But once again, closing above 190.82, new all-time highs, 210.12, then expected over the following couple of months of that. That is the big picture. But until then, holding below 180.34 will keep that 167.99 level in reach. And on the daily chart, you can see we've got a 3/8 downside Fibonacci from last January at 169.94. We've got a descending channel bottom that is 2 or 3 months in the making at 166.34. So it really is pick your spot in the upper 160s. Long-term support, able to contain selling through the rest of the year and perhaps through all of next year, given that long-term buy signal. Now let's take a look at the, there's really not much to hang your hat on. I mean, all of these minor points are carefully chosen. 173.54, 75.30, 76.10, but it is 71.96, nothing more than the move low from August. That is our session containment level. We can double bottom here for the day and possibly the week itself. And if we come off of 171.96, we could rotate back to a variation of this 180.34 channel top. It'll no longer be horizontal. It'll be slightly descending, but it would also then still be our upward pivot point, through the rest of of September. So, holding below 177.34, which is it shown here? I don't see it. I'm quite sure we have it though. Yes, we do. 177.73, sorry, is an upside 5/8 Fibonacci that is still valid over the last week of trade. It is our upper resistance area, can contain intraday buying pressures, below which we actually could today test 171.96, where we can place a daily low. And yes, if we close below 171.96, we should fall into this upper 160s this week. Possibly on Tuesday, we test 169.94. And as we get into Wednesday, Thursday, we drop into the 167.99 region, part of a range down to 166.34 that is well suited to contain selling through the rest of the year. Upside once again, if we happen to push or open today above 177.73, 180.34 in reach. This is a good zone if you're long right now, for instance, to exit. If you're a 3 to 5 day swing trader, for instance, and you're long, to exit that trade and go short. 180.34, a good area to go short if you're a day trader and perhaps a 3 to 5 day swing trader, because as I say, we could come off of here back into the upper 160s again within a week or so of doing that. But if we close above 180.34, I see no good reason to be short this market if your time horizon is the next 2 to 3 weeks, because I would then anticipate 190.82. So if we close above 180.34 and you're an options trader, you might reach for 191 out of the money calls that don't expire for at least a month. You may go further out than that, a little costlier, but you'll get better bang for your buck in terms of the delta response. Inversely, if we push into the low 180s, 180.34, you might reach, if you're an options trader, for those 170 or 168 or 165 out of the money puts that don't expire for at least a month. It would probably take the better part, if you're testing 180, to fall into this zone within 2 or 3 weeks of doing so. So you want to go out at least a month, maybe a couple of months out on those out of the money puts. I think I have said all that there really is that needs to be said today. I'm going to leave you with this image. Our breakout resistance into October, if settled above 180.34. Until then, the upper 160s are calling, 167.99 in particular, that long-term channel top we settled above in May. And that's all I have for Monday's Apple report. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.